Traders are going to long on the US dollar in anticipation of the Federal Reserve's policy decision that will be unveiled tonight. The US Central Bank is widely expected to moderate the pace of further rate hikes, especially in the light of yesterday's inflation data. The annual US CPI slowed down to 7.1% from 7.7%, whereas analysts had projected a milder decline to 7.3%. Traders are likely to give a muted response to the Fed's decision because more crucial events are in the store tomorrow. Several major central banks are holding their policy meeting on Thursday. High volatility will hit the market not only during the European session. The Asian trade will be also packed with the macroeconomic data. First, Australia will report on its labor market, which is likely to lock a decrease in the unemployment rate. Besides, analysts predict employment growth in November and do not rule out that the actual readings will be way higher than expected. Such news will certainly improve the investment luster of the Australian dollar. Nevertheless, traders are likely to shift focus towards the news from China. Asian traders will be particularly interested in the report on China's industrial production because Chinese factories are major consumers of Australian commodities. Analysts warn that the industrial production considerably eased its pace of growth in November due to the COVID resurgence, a threat of tough lockdowns and nationwide protests against the official zero-COVID tolerance policy. The fact that China's industry lost momentum should make a negative impact on the Australian dollar and dampen demand for risky assets. Traders will hardly be poised for risky bets on Thursday. Three influential central banks in Europe are holding policy meetings: the Swiss National Bank, the European Central Bank and the Bank of England. The Swiss Central Bank raised the key interest rate by 75 basis points at the last meeting in September. On Thursday, it's likely to decide on a moderate rate hike. According to the consensus, the regulator is expected to raise the policy rate by 50 basis points to 1%. Importantly, inflation in Switzerland has been hovering at modest levels of about 3%, in line with the market expectations and the official target level. The Swiss National Bank has set the target level at 3.4%. The current CPI rates enable the regulator to focus on support measures for the domestic economy amid global economic turbulence. The Bank of England is also anticipated to moderate the size of a rate hike, though the kingdom is still suffering from a soaring inflation. The central bank reckons that the domestic economy has already slipped into a profound and protracted recession. Nevertheless, in light of the recent data on wage growth, the regulator has leverage to soften its aggressive tightening. The ECB cannot afford to revise its hawkish rhetoric. However, the European regulator will have to make a forced decision amid the signs of a looming recession. Inflation in the Eurozone has been stuck at two-digit rates, with no evidence of ebbing away. Besides, consumer activity has been subdued by high interest rates. Even in the United States, high interest rates and soaring inflation are already taking their toll on consumer activity. Analysts predict a 0.1% downtick in US retail sales in November, following a 1.3% increase in October. It goes without saying that November is a period of pre-Christmas sales when people around the world go on shopping spree to purchase gifts. Commonly, shopping activity reaches its peak. Judging by forecasts, at this time, American consumers decided to spend money cautiously. This approach is a negative for the key sector of the US economy. The situation about consumption is dismal in Great Britain. At a first glance, retail sales edged up by 0.3% on months in November. However, in annual terms, retail sales moved lower in a negative territory. The red-hot data for the UK will be available on Friday. The pound-dollar pair will respond in favor of the US dollar. On the top of that, the economic calendar contains a batch of preliminary PMIs for advanced economies, estimated by Market Economics for December. Experts do not foresee any radical changes. Business activity is shrinking everywhere, thus confirming the signs of a looming recession in the global economy. Such prospects boost the demand for safe haven assets. You have watched Forex Trader Calendar on InstaForex TV channel. We wish you profitable deals and waiting for you on our channel with a new video. See you!